No better person to kick off our coverage this morning at the Bund Summit here on the banks of the Huangpu River in Shanghai. And the financial district across the river is Stephen Roach. He is a Yale Law School senior fellow, also, of course, the former chairman of Morgan Stanley Asia. Thanks so much for having you,
Steve.
Always great
Glad
to talk
to be
to
here.
You. I mean, I'm sure you have lots at the forefront of your mind right now, but let's talk about the upcoming possible Xi-Trump meeting on the sidelines of APEC. How high are your hopes for that to kind of stabilize the relationship? Because, again, Donald Trump is threatening tariffs upwards of 155% because they can't seem to find ground, while they're trying to find leverage, they can't seem to find ground on certain export controls.
Well, you know, leader-leader summits are always important in terms of the cosmetics, the press and media coverage, but they rarely accomplish little. I've studied them back to the first summits with Mao and Nixon. We've had 22 major leader-leader summits between the U.S. and China since then. I'd say 2 or 3 of them have been major world-moving events. The rest have been blah, including the last one between Biden and Xi Jinping in San Francisco. So I don't expect much, but I think it's good that the two leaders will meet.
What do you think could move the needle, though? Obviously, both sides are building leverage for which they could possibly make concessions. Whether it's soybean purchases from the United States, might be too late already. The harvest is deep into the season. But also, of course, rare earths and then semiconductors on the other side.
Well, I think what we'll most likely see, is another taco move on the trade threat from President Trump. He's done it once before. There's no reason to think he won't do it again. And he's already alluded to the fact that, he's probably going to fall back from his threat of an additional 100% on top of the pre-existing 30 to 50. He can't really make up his mind on what that is. But China's got some powerful strategic options that it has deployed recently. Most importantly, I think the rare earths export controls that they've imposed, which is really causing potential pressures on global supply chains and on U.S. manufacturing.
Did the U.S. underestimate the bargaining chips that China actually does have coming into this second major trade war between Trump and Xi, if you will? You can call it that.
Well, I think the U.S. has always underestimated China's bargaining chips. We view in the United States as a relationship that's a one-way dependency, that China depends on us and we don't depend on China. I've written 2 books. I'm actually starting a 3rd on codependency, where we both depend equally on each other. And I think China is demonstrating the two-way nature of this important economic and security relationship.
Yeah. 6 months into, since Liberation Day and the launch of all these tariffs, what does your research tell you that the net impact has been on the U.S. economy? We're baking in already a couple of Fed cuts. Where's the inflation specter going to be as we keep on going down this road?
Well, I look back and what I wrote on Liberation Day, and the actual impacts have been slower and more gradual to occur than I and most others thought. But there are clear signs of goods inflation, especially in certain categories like furniture and some consumer appliances, where price increases are picking up due to tariffs. And I think what I would take away from this experience post Liberation Day is the impact is slower, albeit it's still in the direction that most of us had expected.
Do you care to weigh in at all what your op-ed highlighted, and that is the damage that potentially is happening to the U.S. because of the executive order process, as the tariffs have been executive orders and not through the 2 chambers of Congress, and what that is necessarily doing to undermine American legitimacy?
Well, I think what you're referring to is I wrote an article several months ago called America's Cultural Revolution, that was pretty controversial and got a lot of pushback from my former friends in the United States. They said, how dare you compare this to the most wrenching social and political upheaval the world has seen. My point is revolutions are relative compared to pre-existing norms in any system. And compared to the norms that we've had in the United States prior to Trump 1 and especially Trump 2.0, this is a dramatic shift from the standpoint of executive overreach, from the standpoint of trade policy, from the standpoint of our alliances with the rest of the world. And that's an important point that I would like to stress here. Unlike China's Cultural Revolution, which had no impact on the broader world because China was a tiny, isolated economy, America's upheaval will have a major global impact because of our role in the world.
Do you find that China, though, has weathered this turmoil fairly well or better than in the past because they've found their bargaining chips, whether it's rare earths and magnets, and they've built up their own domestic AI industry, and they're developing their own AI chips. They're buying soybeans from Argentina and Brazil, not the United States. They've built in those buffers, but they have troubles. They've had 3 consecutive years of deflation. There's a race to the bottom. Some call it, Huang Yiping, who we'll talk to later, says it's a rat race to the bottom. So they have some structural issues. How do you see the need for the priorities shift in this next 5-year plan, which the top Beijing leaders are concocting right now to boost consumption, to bring the imbalances back a little bit normal?
That's a key area I've been focusing on for longer than I care to remember, and it's more urgent now because of many of the structural problems you just alluded to, Steve. The property sector, for example, is dead money for the foreseeable future. Exports are booming, but the world is pushing back, even outside of the U.S. I think there's a protectionist backlash, and you wonder how much China can continue to diversify away. The investment sector, which has been booming, is now 40% of GDP. How much higher can it go? So they need a new source of growth, and the Chinese consumer is that source. They've been talking about that since 2007. I've written about it since then myself. And, the debate is endless. It's tedious. And I think they have to be much more aggressive in establishing a target for what they're trying to achieve in the upcoming 15th 5-year plan.
They want a target that they can reach. And you're saying about 50% household contribution to GDP.
I'm saying they need to have an explicit target of boosting the household consumption share of GDP from currently around 40 to 50 by 2035. And the Chinese are good at hitting targets. They can do it. They just have to figure out a way to do it.
Last question, since we're in Shanghai here. There's been a lot of talk, obviously globally, about maybe there's this trend towards de-dollarization, but very difficult to do. Are there any particular steps that you think we should be watching out for from China, or that they've already done with cross-border agreements and swaps and the like, to get the renminbi to be more international? And how do you see Shanghai and Hong Kong playing those roles?
Yeah, this is a debate we've had for a number of years. But what's different about it is that the dollar is now under significant downward pressure for many of the reasons that we were just alluding to in the United States. The executive overreach, the open-ended deficit spending, the high levels of U.S. debt, and the shortfall of domestic saving, which leads you to big current account balances. So there is some gradual diversification. The question has always been, if you don't like the dollar, where do you go? The renminbi is still small in terms of its global presence, but the Chinese are putting a lot of pieces together that will probably make the renminbi more attractive over a longer period of time as a global reserve currency.
Can they do it, though, with a closed capital account?
No, they have to open the capital account, and they have to continue to build the capital reform infrastructure in China. They've made a lot of steps, especially in the equity market, but they've got a lot of work to do in terms of international currency markets.
Stephen Roach, always great. Thanks for kicking off our coverage here at the Bund Summit in Shanghai.
Thank you, Steve.
Don't be a stranger, sir.
Have fun.